Updata is a US tech company, and they are focused on helping movers, when they move house, update their address. So you think in the old world you'd go to the post office and get your mail forwarded. Effectively it started with that concept, but it's not just about your mail, it's about your magazine subscriptions, it's about your insurance, it's your utilities, so electricity, water, gas. It's also about your cable or your internet subscriber. All of those services, there's a lot of work involved in shifting from one house to another, plus of course the actual relocation event itself. So having a relocation company take all your goods and move them from one location to another. So Updata provides an app where consumers can kind of do a lot of those jobs really seamlessly and take what's probably 6 hours work down to 10 minutes. So that's huge value to the customer. But it's also a huge churn event. So when you move house, especially in the States, you might change banks, you might change insurer, you're definitely going to change your local gas company and probably your cable company. And those companies are all very, very keen to acquire new subscribers. So that's the monetization event for Updata. So they have some good technology in the back end, but really their kind of competitive moat or barrier to entry is around the business model. So they have very strong distribution through real estate agents. That's how they effectively acquire users. So the real estate agent offers Updata as a free service to their customers. The customers obviously see value, to them it's free. Updata is currently processing about 15% of all house moves in the States. There's about 17 million moves per annum, and their target is to go to 35% of all house moves in the US. So that will be around 5 million moves per annum. Now the big question is, how much can you monetize one person moving house? So let's say they're doing 5 million moves per annum. If they can monetize at a rate of $100 per move, that would be a revenue of $500 million per annum, which would obviously make it a very, very valuable company. Now, a lot of work to do to get to that kind of level, but they're moving in the right direction, and a very, very strong management team. We think they've got a good chance of pulling it off. I think Updata becomes one of those fantastic network companies. So once you've got all the real estate agents effectively bringing all their consumers into the platform, then you bring in the service providers, the cable companies, the insurance companies, the removal companies, and effectively you create a liquidity pool, which is then very, very difficult to replicate. Effectively, for the number two coming into the market, what would they be offering over and above what Updata is already doing? They wouldn't really be bringing anything in. So it's a classic first mover advantage stroke network advantage. The valuation for a lot of people is difficult. It's currently capped at 750 million market cap. That's a big number for a company that is basically pre-revenue. So how do you value it? Well, I laid out before the number of users they're looking to help move and how you could potentially monetize that. I think the key milestones in this next quarter, in the December quarter, they should be getting their first revenue, and then we'll start to see them go down that journey of monetization. And we've seen that before with companies like Facebook, for example, and normally that is a bit of an inflection point. The shares have had a very good run, but then they've kind of stabilized a bit. I think as we start to see those first revenues come through, I think the shares can kick on.